Ndindi Nyoro takes stand against 244 billion shillings Safaricom shares deal, citing undervaluation and lack of transparency. Nairobi, Kihara Member of Parliament Ndindi Nyoro has emerged as a leading critic of the Kenyan government's proposed sale of a 15% stake in Safaricom plc, a transaction valued at about 244 billion shillings. Nyoro's objections, formally submitted during public participation hearings on the plan, focus on what he describes as a deal that shortchanges the public, lacks competitive pricing and undermines accountability. The partial divestiture would see the government sell part of its 35% holding in Safaricom to Vodafone Kenya, now controlled by Vodacom Group, at 34 shillings per share, a figure that Nyoro says is significantly below the company's true worth. 1. Market price misrepresents true value. At the heart of Nyoro's critique is his view that reliance on the Nairobi Securities Exchange, NSE, share price undervalues Safaricom. He argues that many blue-chip firms, including Safaricom, are trading below intrinsic value due to broader market softness. According to the MP, Safaricom's valuation on the NSE fails to reflect its expanding operations, especially recent progress toward profitability in Ethiopia, and its strategic assets such as M-Pesa. Nyoro highlighted that before expansion into Ethiopia, the fair value of Safaricom shares was around 45 shillings in 2021, suggesting the company today could be worth much more than the implied valuation of the current sale price. 2. Lack of competitive bidding and insider advantage. Nyoro also raised concerns about the process used to select the buyer and negotiate the deal, arguing that it lacked open competition. Without a competitive bidding process, he contends the insider buyer advantage, particularly for an existing shareholder like Vodacom, could suppress price discovery and deprive taxpayers of higher return. He described the absence of a transparent global or international auction for the stake as a significant flaw that undermines public confidence in state asset management. 3. Alternative strategies could maximize value. Rather than rush to sell at the current terms, Nyoro proposed several alternatives aimed at unlocking greater long-term value, including demerger of Safaricom's business units, separating the telecommunications, financial services, M-Pesa, and towers businesses to realize higher individual valuations. Listing on a global exchange such as the London Stock Exchange to attract broader investor interest and better price discovery. Opening a globally competitive tender process after such structural moves to ensure that Kenya gets maximum value for its stake. Government and wider debate. The Treasury, led by Cabinet Secretary John Mbadi, has defended the sale, asserting that it will mobilize resources for the National Infrastructure Fund and Sovereign Wealth Fund while safeguarding the government's remaining 20% stake in Safaricom. Critics of Nyoro, including some lawmakers, have accused him of politicizing the divestiture process. The debate comes as parliamentary committees prepare extended hearings on the transaction, inviting testimony from industry experts, civil society, investor groups, and rival telecom operators to scrutinize the proposal's merits and pitfalls. What's next? As the National Assembly weighs submissions from stakeholders, the Safaricom share sale has become a flashpoint in broader discussions about state asset management, transparency, and public value. With Kenya navigating public debt pressures and the need to expand fiscal space without raising taxes, the outcome of the Safaricom debate will likely shape national policy on privatization and strategic investments for years to come.
You'll pay half the license fee. Half the license fee in terms of billions of shillings. Money enough to make basic education in Kenya free today. So the Communications Authority, the management, went ahead to commit Kenya to a loss of close to 100 billion Kenya shillings on conditions precedent. The board had not met when the management of CA did that. And I would want them to table to this committee when the board of CA met to actually discuss about not any other matter, the conditions precedent that we have given to the buyers where Kenya is losing over 100 billion shillings. So we are here talking about 2 or 4 billion, but the net amount of money we are actually getting as Kenya is 104 billion, because 100 billion shillings is already lost in conditions precedent. Chairman, if there is one thing that you have to stop is that one, because there is no basis.